Good morning, everyone. How's it going? We are half an hour away from opening on Tuesday, August 13th. So the big report, if you're following the reports right now, is the PPI report. So we were talked about yesterday how the expectation was the same as a year ago. So unless we make significant progress against that, then it's not going to be all that exciting. There's also been talk about how we're highly reactive to the Fed news, and Fed data right now. But my opinion was that actually we won't be because everything's already priced in. So unless we have really negative data, we don't really expect the markets, or I don't really expect the markets to move all that much. So let's take a look at that PPI report, see how it came out, and see how the markets are reacting to it. Okay, we've got our PPI report right here. And we've got our year on year. The prior was 2.6. The consensus was 2.6, and the actual is 2.2. So that is a much better number than expected, and is actually below the consensus range. So even the lowest estimates, we beat that on PPI year on year. So X food and energy year on year 3.0, consensus was 3.0, and actually I'll just call it 2.8. I don't know why we took the higher end right there, but it came in at 2.4. So again, beats even the low end of the consensus range. So that's a very positive PPI report, especially in the taking the lens of inflation. So the market should react favorably to that. And if we are going to be highly reactive to the Fed data or the inflation data right now, then we should see a very large reaction to this report. So let's see how our futures are looking. We got our S&P up about 55 basis points. Our NASDAQ maybe 80 to 85 basis points. And our Dow, that would be about 25 basis points. So positive, definitely positive, but given the elevated volatility that we've seen lately, it's not super positive. This actually looks a lot like yesterday, maybe tiny bit more than what we got yesterday. So this is, so far, I'm not seeing a huge reaction to this. Let's take a look at our VIX real fast. Yeah, and volatility is just down a hair, not really all that much. So even if we see a big reaction in the indices, we can't really trust it because the VIX really didn't come down. It's still above 19. It's still probably pretty close to 20. Yeah, 19.84. So this is still elevated. This market hasn't bought into yet. So really, if we're going to see a strong move downwards in the VIX, we're going to want another similar performance in the CPI report tomorrow. So far, I'm not seeing any huge or highly reactive action in the markets, but let's look at the intraday. So we did pop up on the S&P on that report, but almost immediately we came right back down, and then we moved back up, and then we're kind of where we were on the initial move up. And in light of things, this is not a huge move upwards. So that means we closed over here. The majority move was just overnight action, Asia and Europe. We didn't pop up that much more because of that PPI report. Russell was a little bit more reactive. Dow Jones, we don't get enough pre-market data, but I mean, it actually seems lower. Low. Let me see where 530 was. Oh, it was this green mark. Okay, a little bit higher, but still not. We were higher early at the open of this pre-market session a few hours ago. So we've got the QQQ very similar to the SPY, and let's see if we have bonds. Bonds, same thing. It spiked up, came way back down, and then started to move higher. So this market is not highly reactive to the reports, at least not the PPI report, even though we got a pretty amazing PPI report with we beat even the lowest consensus numbers. So I don't think this is the focus in the market right now, given the amount of movement that we got off of a very, very positive PPI report. So the question now is, what is the focus? Well, let's take a look over here. Let's go back at our SPY and take a look at it in the context of the daily movement. So we can see in the pre-market, it looks like we're just opening a tad bit above the high of yesterday and very close to that EMA 20. So do we get a lot of volume coming in today? Do we get directionality coming in today? That is a question mark because we still have CPI tomorrow. If you told me that we had the PPI and CPI, if we looked at this, if the picture looks the exact same tomorrow morning and we get the CPI report, then I would say, okay, yeah, we have a reasonable chance of moving up and touching that MA50. Today, since the very mild movement of the market so far against that PPI report that was very, very positive, then we might struggle at this EMA 20 or just a little bit above the EMA 20 about this 540 level. So we'll see. But my current feeling is that we'll probably struggle over there and not make it all the way to the MA50. If we do make it all the way to the MA50, though, that could be quite positive news because then the CPI report, if we get similar numbers and like similar beats off the consensus, then that could be enough to pop us above that MA50, and suddenly our picture of the markets looks very different. Still too premature to predict that or think about that yet. We'll see where we close today first. Currently, it's not looking too much like we are going to close significantly above that EMA 20, but sentiment can change throughout the day. We still have a lot of risks in this market. We still have that carry trade risk, although it seems like people are shrugging that off and forgetting about that. We had a recessionary worry. There was a whole bunch of headlines about recessions. Seems like people are starting to forget about that. Let's take a look at our commodities and see if there's still that concern, because we were talking about just not too many days ago, talking about how we have inflation worries and recessionary worries, and that could lead to stagflation. So right now, it looks like maybe the inflation worries can be toned down a little bit. They're obviously not solved yet, but that we are a lot closer than the 2.0% mandate that Powell keeps talking about. So if we get relief off of the recessionary pressures too, that should be very positive for the markets. So again, why didn't that send this significantly higher? So there is something else going on in this market. Let's take a look at things are falling behind me. We had a small earthquake yesterday afternoon, a little bit of excitement there. But what we want to see is recessionary fears. And so a clue on both inflation and recessionary fears will be commodity prices. So I'm going to take a look at DBC. DBA is agricultural. Okay, that is coming down a little bit. So probably in reaction of now lowered expectations on inflation. But in any case, it wasn't looking very strong. And DBC, commodities, it's been pouncing up and spiking, not really reacting at all so far in the pre-market. Let's take a look at oil, crude. Oh, that's the wrong one. If we can get a little bit higher today, then we'll be a lot more comfortable with energy. So that would become kind of positive because we would move through almost all the resistance at that point, and we have the potential of challenging those highs. If that's the case, then recessionary fears are scaling back. Crude oil or oil and energy does not do well during recession, but it might go higher because of inflation. So why isn't this moving downwards? Well, there might be recessionary fears still that are holding this down. Let's take a look at USO. USO is doing quite well, but again, in the pre-market, a little bit down. So if I have lower inflation, I would expect oil and every commodity to pop up a little bit. And instead, well, I would find, sorry, if I have lower inflation, then all of those commodities should come down a little bit, and then recessionary fears should boost them up a little bit. So so far we're just down a tiny bit, not a big reaction. So again, these markets are not highly reactive to this PPI report and probably not going to be highly reactive to the CPI report. So I'm not going to count on the CPI report to send us above the MA50 unless we close right at the MA50 today. Let's take a quick look at silver and gold. I need a cleaner chart. Let's go over to this tab. Okay, pre-market down. So not, well, let's look at gold. Let's not draw our conclusions from silver. All right, pre-market barely down. So again, not really reacting. And we're nearing highs, previous highs right here. So that might put up a little bit of resistance for gold. And recessionary fears would send gold higher. And so far, we're not seeing that. So this picture is looking a little rosy, meaning that lessened fears of recession, lessened fears of inflation. But again, if that's the case, why isn't my SPY moving higher pre-market? It's just sitting at the highs of yesterday. We would expect that to be very, very positive news and send things upwards, especially if we're going to be highly reactive to Fed data right now. So everything, in my opinion, is already baked into this market. We are expecting the market is expecting, I'm not expecting, the market is expecting a rate cut in September. And for whatever reason, this swung right back up above 50% now of a chance of a rate cut, 50 basis point rate cut in September. I don't know. 50 basis point rate cuts are rare. The Fed likes to move in 25 basis point increments. And there has to be really strong and compelling reason for us to move 50. And higher, they only moved beyond 50 one time. They moved 75 during COVID because it was such a huge shock to the system. So to say 50 is, I can't come up with a reason why we would think that we would move 50. I'm even struggling to come up with a good reason why we would move 25. But this is what we have right now. So if we get a disappointment, then that could send markets crashing lower later on in September. So the story could change by the time we hit September. But so far, there's no compelling reason for us to do a 50 basis point rate cut in September, and not even that much of a case for us to do a 25 basis point rate cut in September, given the heat and the scrutiny and the criticism that the Fed would subject themselves to if they did that right before an election. So I don't see it happening. And right now, this market is still looking like this. If I'm generous, I'll draw it right there, but really, that's kind of what it looks like. So until we break above these levels, and really it's going to be that MA50 for me. Until we break above that MA50, we're not going to be super excited or super positive on this market. And I'm not going to be super negative either, like I've been saying all week and all last week, is between that MA 200 and MA 50, we're really in no man's land, and we're just going to expect chopping sideways. The PPI report didn't do anything to change that. The CPI report, unless we close very close to that MA 50 today, is not really going to do anything to change that either. Let's take a quick look at our sectors and see. So if everything is fine and dandy and everything is rosy and everything's going to move upwards, what I should see is that the tech, the retail, the consumer discretionary, the small cap stocks really looking positive and looking good and moving upwards and breaking this downward slope that I drew on the S&P 500. They should be above those and ready to move higher. And then all my defensive sectors should start to look either flat or down. So we'll take a quick look at that because that's not what it looked like yesterday. And we should start to see 90-day highs or lows. If we're going to get directional, we need to start seeing triple digits and not just high 100s, high 200s, high 300s even. And of course, if we go over 400, then we're going to expect a pullback. But right now, we're still in double digits. That might change today, and we'll see. So that's going to be something I'm going to be looking out for this afternoon. And what we really need to see is these pictures looking very different than what they have been looking. So gold is looking strong and looking like it could break these highs and move higher. So gold needs to break down for us to be pessimistic or optimistic on the overall markets. The SMH needs to get above several areas of resistance, above this 265-ish level before that starts to look healthy. But we've got the EMA 20, the MA 90, the MA 50, and this 265 level. We have some VWAPs in the way. So there's a lot this market has to do in order for SMH and tech to look bullish. Communications looks great. Financials has some potential, but it has 2 levels to break up above. And the defense is still looking positive. So that is more of a defensive sector, no pun intended. And we've got industrials looking very flat. Consumer staples still looking very good above every single one of its moving averages, sloping upwards gently. That's looking very strong. Same with real estate. And energy is still not looking that great. And healthcare looking very strong. So all of my defensive sectors look really good. And they need to go flat. And then the speculative sectors, let's find them. It's like they're towards the bottom now. XLK. That just does not look like a bullish picture. This looks very, very bearish. XLY looks very, very bearish. If I look at XLK, I mean, that is a very steep slope. So this is a steep slope downward movement. We're just touching it as resistance. And I'm at the VWAP, I'm at the MA 150, I'm at the downward slope, I'm at you're below the EMA 20, below the MA 100, below the MA 50. There's just a lot, or sorry, that was the MA 90. There's a lot that this market, the tech needs to do in order to get to be bullish again. So could it happen? Yeah, absolutely. But what are the chances? What is the likelihood of it happening? So if I look at XLE, it was in this downtrend before, and notice how it spent a significant period of time chopping sideways and then coming back and retesting that previous slope line that it broke out of and then moving upwards. And then now it still has to get above a little bit more resistance above these highs before we were really positive on XLE. So XLK, if it starts to go positive, it's likely going to follow a similar path. And right now, if you say, hey, Kane, this is the beginning of that, then I would say, are we going to chop back and forth across the MA200? And then tell me that now we're in positive territory, and then break above and have all of my moving averages converge to this MA200 and just chop across it. Okay, that's possible, but that's not a great place to be chopping across. And once all my moving averages converge here, then basically what that tells me is that I need to be stuck in this area for a while before it's going to choose a direction. And there's no guarantee that after chopping for a while that it's going to move upwards. In fact, it is more likely that we continue in the direction that we were moving before the chopping period. So most chopping periods, of course, during a transition, it's going to change. So this chopping period was a transition and moved upwards, but this chopping period was up. 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 This chopping period went down slightly, but overall was up. So it is far more likely to move in the direction that you were moving before the chop period. So it's a long time. It's going to be a while. Unless we have a V-shaped recovery, it's going to be a long time before XLK or SMH or the QQQ or the SPY look bullish again. So I'm definitely leaning more towards the downside, but again, I'm not investing that way right now because we are in the chop sideways period. And that chop sideways period could last a while. And yesterday I was talking about how it could last all the way until the elections. So we'll see. I don't know that it's going to last that long. I'm just saying that it's possible that it's going to last that long. And I can't get super directional either way until I'm confident that we've broken past that chop period. And our first opportunity maybe is if we get very positive today and close near the MA50 and our CPI report sends us above that. But again, the chances of us getting super positive today, given the so far muted reaction to a very, very positive PPI report, is kind of low. I don't expect us to close at that MA50 today. If we do, then my tune will start to sound very different. I'll be a lot more optimistic that we can break above that MA50. But for now, it's just not looking great. But we'll know better in about 6.5 hours. So we'll see. So we'll be watching that very carefully. Where do we close today relative to that MA50? What does our momentum look like in terms of 90-day highs and 90-day lows? Those are going to, and where does VIX go? And where do bonds go after today's session? Those are all going to be very telling signs and what we'll be focusing on in the afternoon. So for today, I wouldn't be making any bets because I'm expecting sideways movement, or at least not any. I would day trade, but with the CPI report coming out tomorrow, getting into a position, unless it's a tail risk trade, is very, very risky. So I would be avoiding doing that. Okay, so we'll end it here. We're almost at the open, 5 minutes away from the open. So have a wonderful rest of your day, and I will see you in the post-market session.